Director and Chief Economist of Econometrics ZA, Dr Azar Jammine, joins us now via Zoom to help us make sense of the MPC's decision and what it all means. Always good to talk to you. Welcome to the program. Happy New Year.
Thank you to you, Peter, and Happy New Year to all your viewers as well.
All right. So this 25 basis points increase didn't come as much of a surprise to you economists, I don't think.
No, I think there was a universal, unanimous belief that the increase would come about, partly because the inflation figure that was released last week was the highest in 5 years, but more importantly, because there are signs that interest rates around the world could well be on a rising cycle. That expectation has in fact hammered financial markets since the beginning of the new year. And the Reserve Bank would run the risk of being out of kilter with the rest of the world if it didn't follow the sharp increase in domestic inflation with an increase in domestic interest rates as well. What the risk would have been that in the absence of such an increase, the rand would have really fallen out of bed. And that in itself would have sparked still more inflationary pressures.
So is the job of the Reserve Bank managing inflation? Is that what they focus on and their decisions are based on that?
In South Africa, that is their first and foremost and in many ways only objective, which is to keep inflation under wraps. And to be fair, they've been extremely successful in that in the last 5 years, keeping the inflation rate within the official inflation target of 3 to 6%, unlike many other emerging markets which have allowed inflation to go surging ahead. And more recently, unlike the United States, which now has an inflation rate well above that of South Africa for the first time in 20 years.
So what does it mean as we start to look forward? We're hearing that our economy is going to grow, by 1.7% or something. What does that mean for us? As a debtor, all I know is I'm going to be paying more for my mortgage in the meantime.
Fortunately, as a debtor, Peter, you're probably one of those who earns sufficiently to be confident enough to take on debt. And the story of the South African economy is that most of those people who carry debt are in fact those who have jobs and who are therefore able to fund the interest payments on that debt. And those people are still in jobs. They haven't lost them as a result of COVID. Whereas the majority of people in this country do not earn enough to be able to actually get debt other than through informal means. And as a consequence, they are not, relatively speaking, won't be affected by this increase in interest rates. Secondly, just to put it into perspective, even those who do carry debt, the repo rate has gone up from 3.5% to 4%, which means the prime overdraft rate has gone up from 7 to 7.5% over the last 3 months. Bear in mind that the prime overdraft rate was 10% prior to the COVID-19 crisis. And it was only after the crisis erupted that our interest rates were reduced by 3% and the prime rate came down to 7%. So with the fact that the prime rate has gone up from 7 to 7.5% is relatively modest compared with where we've come from, where 3, 4, 5 years ago we were sitting with prime rates of 10% or more. And so to that extent, one shouldn't panic about the impact of this increase in interest rates on the financial health of consumers.
All right. I mean, there's always another side to this, isn't it? And those that have savings, this is good news.
This is good news for those with savings. And by the way, many people have also been able to increase their savings in the last 2 years with COVID. Those who have jobs and are no longer having to drive to work have saved on petrol costs. And all those who have been too scared to go to restaurants or on holiday because of COVID have also suddenly found that they've been managing to save a lot more money than they might otherwise have done had there not been COVID. So there has been, in many instances, an improvement in financial health in the last 2 years.
All right, so we've talked about what this inflation story means. I'm curious about, and I'm not sure if you've seen this report by the Southern African Towards Inclusive Economic Development. What are your thoughts, first thoughts on what's come out of that report?
My thoughts is that is very well intentioned, and is in particular, we desperately do need to try and uplift small business activity, which has been completely subjugated to big business and trade union action and government regulation over many years. Those actually form the cornerstone of the structural impediments to economic growth. So yes, to the extent that this initiative is aimed at trying to find ways of promoting small business activity, it is to be welcomed. The concern that I have is that there are many more fundamental areas which are likely to prove to be impediments to even allowing one to initiate any action to try and help small business. And here I'm thinking of corruption and state capture, the lack of infrastructural investment, the poor state of state-owned enterprises, which owe small businesses billions and billions and just don't pay for work done. The whole aspect of the poor level of competence in the public service to actually carry through activities that small businesses engage with them on. All those things need to be addressed. And finally, of course, fundamentally, the need to improve education so that people who want to start small businesses have enough intellect and cognitive ability to be able to actually exploit that opportunity. And then finally, of course, the other aspect is the labor market. If trade unions continuously try and pull their weight, small business will just not get a look in, because the trade unionists are keener than anything to secure stability and tenure of jobs within the working class, who usually who belong to trade unions, who usually belong to large organizations and who are represented by shop stewards. Small businesses are cut out of that whole field, and they are actually, if anything, jeopardized by the action of trade unions. Those issues need to be addressed. And I don't know whether these research papers that are being proposed to help small business activity really address these fundamental structural issues.
When I read reports like this and have discussions about this, one talks about small business, and often it's in a formal sense. And yet what we're seeing is more and more informal businesses and the informal sector growing much faster, and that hardly ever gets accounted for or policy-driven towards the informal sector.
There is some truth in that the informal sector is probably underestimated in South Africa. Statistics South Africa do attempt to incorporate it into their studies. Even the quarterly labor force survey shows, for example, that just under 3 million people out of the 13 million people who are employed in South Africa are employed informally. So they do measure it that way. But we do find, for example, as we saw last year, that our GDP estimates are revised upwards on a regular basis every few years. And a lot of that has to do with the fact that informal activity is underestimated to some extent. However, if it were the panacea to all our problems, I don't think we would be living with an unemployment rate officially of 35% and unofficially of 46% or so.
So is it political will? Is it not having the right people in the right positions? What is it that's been holding us back that we need to change so that a lot of the policies that are put forward, and they're quite good a lot of the time, fall short when it comes to implementation?
I think you've mentioned a couple of the problems yourself. Absolutely, what you said, the political will is not there. We're seeing it every day at the moment, where we should be desperately trying to embark upon infrastructural investment programs to get job creation going. And instead, the media is filled with news about factional fights between political parties and diversion of attention towards the National Elective Conference of the ANC in 11 months' time, rather than focusing on trying to get this economy moving. The second point is we do need more competence of the right people in the right positions. And with policies of cadre deployment, that kind of situation is just absent. You're still seeing people being appointed to positions on the basis of their loyalty to interest groups and political parties, rather than because of their qualifications and capabilities. And so you fail to get the implementation of projects that are aimed at addressing these structural impediments to growth. The most classic example of all this is infrastructural investment. President Ramaphosa in October 2020 announced a program of 51 infrastructural projects worth 340 billion rand. This was followed up in November in the medium-term budget policy statement by Finance Minister Godongwana, saying there was a further 55 projects worth 559 billion rand that had been agreed upon between government and private sector. And yet we are not seeing that actually materializing. Why? Because there is a blockage in terms of a lack of political will and prioritizing political imperatives over economic imperatives.
How do we get real economic growth going? Is it something that we can manipulate, or one just tries to create an environment where it's possible?
I think it is absolutely possible, Peter, notwithstanding the relative lack of skills in this country. First of all, try and improve the educational outcomes to get people to become more productive through the correct and appropriate and efficient ways of educating them at early childhood level, at primary, at secondary level, and of course even at tertiary level. Secondly, what we definitely need is the political will to actually get thousands, tens of thousands of people involved in projects, infrastructural projects that can improve the entire environment. During the holiday season, I traveled to a number of different provinces in the country, to beautiful tourist sites, taking visitors that I was hosting. And all I saw were the degeneration of our roads outside of our national roads, our ordinary roads connecting to some tourist sites. Very soon, no one will be wanting to go and see the Bladder River Canyon or the Golden Gate or that kind of tourist attraction, because the roads will be too poor. Now, what a wonderful, brilliant opportunity for job creation to just get thousands of people going and fixing those roads and building new ones to get going. And it's not a case of just not having the money. It's the political will. Instead of diverting those funds needed for that upliftment to corrupt practices, rather get going on these projects. And you could see an enormous change in this economy in next to no time.
Azar, always great talking to you. Thank you so much indeed. Your insights, always appreciated. Thank you.